I have experienced firsthand what can happen when you think you know it all and you don't, right? And I'm going to arguably say the more you think you know, the more dangerous you are. You hear people say, I know enough to be dangerous. That literally means I know enough to make certain decisions, but I don't know all the details, and those details will bite me in the you-know-what.
Welcome to another episode of Your Business, Your Next Level. Today, we have a special guest with us here in studio, Ched Sutton. Ched is the investment maverick, as he calls himself, and managing partner at Quattro Capital, where he leads acquisitions with a visionary approach. We're going to hear more about that today. His unique blend of aerospace engineering expertise as well as business acumen have enabled him to identify and strategize on winning investments. Having previously worked with, guess what, NASA, GE Aviation, and GE Renewable Energy, Ched integrates his international negotiation and relationship building skills to drive Quattro Capital's growth. Beyond work, Ched is a devoted family man. He indulges in hobbies like golf, playing guitar, and renovating his historic home. I do want to talk about that, Ched. Under his transformative leadership, Ched has dedicated to generating value and uplifting communities through Quattro Capital's investments. And on top of all of that, above all of those areas of expertise, Ched is also the host of the Real Estate Runway podcast. So before we bring Ched on, if you have not listened to that podcast, please make sure you go check it out. Yours truly was actually a guest on the podcast. So look for that episode as well as some of the other amazing episodes that Ched has on there. Ched, without further ado, welcome, my friend. It is so nice to have you finally here in the studio.
Eunicia, all good things take time. I know we rescheduled this a number of times, my fault, but it is so good to be here. And it's almost like hearing your own voice when you're hearing your bio read in front of others. Thank you for helping me get through that and reading it for me. But yes, happy to be here. Happy to have a great conversation with you today.
Here's a little bit about me, Ched. I used to try to, I won't call it wing it, but to try to do justice to our guests' bios as they were coming in. And inadvertently, sometimes you leave things out. And so I made a decision a while back to say, you know what, I think I'm going to do justice to those individuals that are blessing us with their presence. Because listen, you know yourself best and you know the things that you're doing really well out in the world. So that's the reason I make sure that we cover it all. So thank you for that.
I'm grateful for that. It just makes me wonder how I have time to do much else in the world.
I know, right?
Yeah, let's do it.
I love it. Tell us a little bit about yourself. Obviously, you and I chatted before, and I so appreciate your friendship and just learning more about you and your family. But on a business side, tell us a little bit about how you went from aerospace engineering, first of all, to Quattro Capital, and a little bit about where you're at now.
Yeah, absolutely. Love to walk that line a little bit. And Eunicia, I'm happy to say I don't do many podcasts anymore. So the fact that I'm here with you, it just means I like you. And I'm excited for our conversation today. I'm so glad to be here. It's been a while since I've been a guest on the show. Yeah, so where did I come from? I grew up in a middle-class family, like many of you listening here, actually in the great state of Texas. I was a Texas boy for a very long time. And look, I was the kid who was always playing with erector sets and Legos and Kinects and all the little things you can build with. And as I grew older, I became pretty good with numbers. I got the math awards and things like that, so, and my logic and reasoning developed. So the world told me, Ched, you should be an engineer. And I listened. So I followed that path. I became an engineer, aerospace by trade. I really only ever did mechanical work in aerospace field, but that's neither here nor there. And that led me to careers such as being a propulsion engineer with NASA in Huntsville at the Redstone Arsenal facility, Marshall Space Flight Center. That was wonderful and really cool work, to see what can happen when the government and the private sector come together and work on something like the space shuttle or the Saturn rocket or anything of that sort. So I was fortunate enough to work on the space shuttle and the International Space Station while those were still mainstream. I dated myself a little bit. You can tell the space shuttle is not flying anymore, so I'm no longer in that role. But I did ultimately take a role with General Electric, where I took that propulsion design experience and I spent several years designing the hot section, kind of where the explosions and fire happen in an aircraft engine. So that was a big part of hardcore engineering. But NASA, they don't really do much of the engineering in-house anymore. It's more project management work. And so as a young engineer, I didn't appreciate that was actually a bigger picture role, but I wanted to do the hardcore engineering. I wanted to have my hands on the hardware and be a grease monkey and all that. And so I went that route and designed and built aircraft engines for many years. Earned several patents in combustion technology. So if you fly on any of the transatlantic Boeing aircraft or Airbus or your Southwest Airlines type aircraft, and if you're a military pilot and you fly on some things I can't talk about, I've probably touched your engine in some way, shape, or form. So it was a really cool, really amazing time in my life. But around that time, when I finished my third design program, I looked down and realized, I looked to my left and I saw my senior engineer over here, and looked to my right and saw him plus 20 years with much grayer hair as the principal engineer. And I was like, wow, I've really pigeonholed myself. Like, I'm going to be doing this for the rest of my life, but I'll just be really good at it. And oh, by the way, there's 3 companies in the world I can work for, and I already work for one of them. I started to ask questions about how do people find happiness? How do people grow wealth? What does all that mean? Because climbing a corporate ladder wasn't doing that for me. Remember, I mentioned a few patents. The realization moment for me that you're only ever going to get paid just enough by a corporation to keep you from leaving, and also commensurate with how hard it is to replace you. So for example, there's a reason that certain service industry jobs that are high turnover, easy replacement get paid less than, say, an engineer or a doctor, or then get paid less than, say, a CEO of GE, right? It's harder to replace that person, and they're going to pay you just enough to keep you from leaving. I learned that because those patents that I developed actually put GE into a multi-billion-dollar space as market share leader, and I got a few $100 and a 3% raise that year like everybody else. So I was like, okay, I'm worth more than I'm ever going to get paid. That was the light bulb. So y'all may remember back in the mid-2010s, the GE stock price went somewhere from the $40 range to the $4 range. And it was a big deal because dividend shareholders were no longer getting their dividends for the first time ever on that blue chip stock. And so what does GE do? They pluck a lot of us who have hardware design experience, manufacturing experience, people leadership experience, and all the things that kind of make you a GE leader. And we formed an internal consulting group. So like an internal KPMG or an internal McKinsey and Deloitte or internal PwC. And the idea was that my whole job for the next several years was flying around the world and figuring out how to manufacture these big corporate things or these big mechanical things like aircraft engines and healthcare equipment and wind turbines and all the big cool stuff that GE made with less variable costs, therefore improving productivity. So it was a really cool role where I got to experience international supply chain negotiation. I got to experience culture change. Imagine a 20-something young hotshot from America going into a factory in Norway and telling a bunch of 50-year-old Norwegians that why we need to do something different. I had to learn a lot on how to influence people and change culture and things like that. And so that really catapulted me into, I understood how an international matrix organization worked. I understood global business, profit and loss management, P&L management, and all the stuff that goes with it. And so that was like a crash course in big business. That ultimately led to a young executive leadership role where I was in charge for GE. This is where GE Renewables come in. I was in charge of all of the heavy electrical spend globally for that organization. And so think of purchasing, think of sales. I was the opposite of sales and purchasing. And I had the checkbook of GE on how we spent, where we allocated share, negotiating pricing, all that kind of stuff. So it was a really fun strategic chess game. But this is where the story turns, and I'll stop it here for some questions. Before that, I had started growing a real estate company with my family. I'm actually a third-generation real estate investor. I started to figure this out when grandfather passed away in 2016. And it was after I was having that conversation with myself of how is wealth generated in this country? It's sure not for working for somebody else, because we just heard my patent story. I've had a lot of great experience with these companies, but where do I go from here? And the problem with my big global executive role was, for me to win, others had to lose. And I was really good at it. It didn't feel good, right? For big GE to win, the small supplier had to cut their margins. And it was this constant competition and commoditization of things. And it just didn't work well for me. I got involved in real estate. And as I'm reading all these books about how in the world is wealth created in this country, real estate was a common denominator. Sure, you had the Elon Musks and the people who hit a big IPO or who invented this widget. But even after they did that, they went and bought real estate. So it's a very interesting thing. That asset class has been a really long-term generational wealth builder. And then I discovered my family was in it. And so we started trying to build that. And I'll pause there because I've said a lot about my prior journey, and then we can get further into how we came to where I am today, if you like.
You know, as I'm sitting here listening, I feel like I'm really reliving part of my journey because Deloitte and Ernst & Young, and almost took a job with KPMG before I went to Booz & Company, who is now part of PwC. So I understand that world very well. I was on the other side guiding what a lot of the major companies worldwide are doing and were doing in terms of cutting costs, doing more with less, optimization and things like that. And you're right. One day I too had that awareness of, gee, I could even get the partner title. But it was my husband when he asked me, he said, you've done amazing for yourself in corporate America. Absolutely amazing. You're always on a fast trajectory, accelerate trajectory. But what happens with the legacy? You cannot gift, you cannot deed, you cannot give your partner title to your children. So between that and one of my mentors at that point in time who said, you're smart enough to be entrusted with a multi-million-dollar business, hundreds of millions of dollars in business for a company that clearly trusts your abilities to drive that, but you're afraid to do something for yourself. I don't see the rationale, is what this particular mentor said. And at that point in time, I said, oh my gosh, it sounds like you're talking like Daniel, like my husband. And she said, maybe you should listen to him. And so as you're going through that, something that what really struck home with me is when you said for the big companies to win, others have to lose. And now with Excelstra and with what we do with our clients day in and day out, we see that all the time, especially when it comes to the financial services industry. For the banks, for the large financial institutions to win, oftentimes it's the individual consumer, it's the individual investor, those people that have the 401ks, IRAs, and everything else that the financial services industry sells. They're the ones that are hurt the most. So as we go through our conversation at some point in time, I'm sure we'll probably address that in terms of what does it mean to have a team. But that's something that really hit home with me because we see it. I saw it, of course, in consulting, but I'm seeing it even worse in financial services because it impacts individuals' livelihoods every single day, regardless of how much money they make. They could be making $300,000 per year as a household. They could be making $30 or $50 million. They're still impacted adversely because of that.
That's right.
So if you have any thoughts on that, I'd love to hear them before we hear more about Quattro Capital.
I do. And it's interesting because I'm going to use the term zero-sum game, right? Literally in this, we'll just go back to the role I was in. It was literally a zero-sum game. There was a finite amount of volume that could be allocated. And for me to move that volume from one shop to another, it cost money because someone invested money to bring that money in, machinery, tooling, infrastructure, all that kind of stuff. And the company requires a lower spend than it did the year before. And so whatever company, like it's very simple, whatever company is going to give me that spend and is capable of manufacturing this product, they're going to get the volume, which means that fixed piece of pie is going to go to them. And instead of it just being, I transfer what this company had to what this new company is going to have for volume, but you have to also think about the fact that they now have to pay to buy tooling and infrastructure and all that to make this part. And so they're actually losing some money. And so it's a zero, if not negative sum game. Like someone loses when I hit my metric. But you could really think about the stock market or really anything in I'm just going to call it paper assets industry. Anything in that industry, it is a negative sum game. And there's several books out there that talk about this. I'll have to think of one before the end. But if you think of it this way, the people brokering bonds, mutual funds, things like that, they don't care whether you make money or not. They're going to collect their fee. And then at the end of the day, it's a game of musical chairs, right? It goes up and down. And if you think you're going to beat the algorithms on your own and trade better than Wall Street and Main Street and everyone like that, mainly Wall Street, you're sorely mistaken, because they're going to get the information before you will. They're going to make the trade. They're going to collect their fees on your trades too. And then you're probably going to get the lower end of the deal, the negative sum game. Anyway, we can go down that path a lot, but that's why I'm not in paper assets.
I am so happy that you mentioned that, because that's exactly the reason why Excelstra was born. Before it was even called Excelstra, when I started working with individuals, specifically looking at those paper assets, you're just really hitting it hard. I came home, I'll never forget, I came home one day and I told my husband, I said, there's something majorly wrong. Like I finally, because we were always dabbling with real estate, and I didn't realize for the longest time, why didn't our financial experts enjoy that? It was always, let me tell you why real estate is not a good idea, or let me tell you why investing in different asset
They can't
classes,
pay commissions on it.
They can't pay commissions. And then when I started seeing it from the inside out, I thought, this is unbelievable. Because the reality is that most people, they have quotas and they have to meet those quotas, and they have a predefined menu of services and solutions that they offer their clients. And if they don't meet those quotas, they're out. And when I realized that, I thought, we've got to change the paradigm, because if it's not that individual that sells those products, those financial products, that ends up being negatively, adversely impacted, he or she's going to continue doing what they're doing, and they're going to move on. If it doesn't work with one company, they'll go elsewhere. But what about the client? And so for us, we started looking at it from the client standpoint to say, okay, how can we figure out how to put all of that aside, take all of the requirements that the financial services industry might have for an individual or a company, and say, how do we put it on its head to ask the question of how can we improve the client's bottom line, and make sure that if they want to be invested in different asset classes, we're not the ones that are going to tell them absolutely not. On the contrary, that's the ultimate way to diversify. It's not, we don't look at diversification as a pretty pie that has a bunch of colors, right? That's all driven still by the market. It's truly being diversified across different asset classes, which is why I'm so excited about Quattro Capital, because it sounds like that's exactly what you realized as well.
Something to that effect. And I'm sure let me finish the story and then we'll get into the assets. So how did I start Quattro Capital with my partners? How did we go and acquire all this real estate? How do we set up investment funds? It didn't start out this way, right? I mentioned, you go back into the story, and I was a corporate awesome for a while, just like you. And I enjoyed it until I didn't. But what was happening in parallel, so I didn't ultimately leave corporate America until 2020, believe it or not. I did two things for a very long time, and I had it dialed in. So I mentioned I was a global executive. I had mainly European and Chinese teams. So I would wake up at 4 a.m. I would work with my European and Asian teams, and I would stop working at about 12. And that worked for me. And I didn't need to sleep at the time. And I would then start working on our real estate company after a brief lunch break until about 7 o'clock when the family came home, spend about an hour with them until bedtime, and then I'd go back to work for either company that day needed me the most. And so it was not sustainable, but it worked for a time. And the reason I chose to do that was I discovered when grandfather passed away that, okay, wow, they really did something awesome with real estate. And as I mentioned, I was really asking questions on how wealth was built in America. My aunt takes over the family estate, and around the same time I'm asking these questions and reading all these books, she takes the real estate portfolio that we had, a small number of single family buildings, I think it was like 70 at the time, and really trades up on some of them, renovates some of them, sells some of them. And we look down and the portfolio has probably half of what it did before. It's worth 3 times as much, and it's cash flowing better. And we're like, okay, there's something to this. How do we repeat this? It was the words of my grandmother. We were driving by in Waco, Texas, and she points to an apartment building over by Baylor University and says, I want to know how to own that. And that stuck with me. And so as I was figuring out how to perhaps replicate the single family portfolio in my state and to grow the family business, we started researching other asset classes, and we're looking at office buildings, and I think, oh, we didn't do that. and retail and multifamily, which are apartments, and a lot of other things. And ultimately, the supply and demand imbalance is still and was at the time there to where, okay, it's one of the three basic human needs: food, water, shelter, right? Something's going to have to really change in our society for you to not need a place to live anymore. And we really decided that the supply of apartment buildings, even with the building that we did in the last several years, it hasn't caught up to demand, and it's not going to for a long time, especially after what's going on right now with the interest rates and builders not being able to make pro formas work. So we started buying apartments, and it was small at first, 30 units here, 20 units there, just with our money. Then some people approached us and said, "Hey, you're doing pretty good. This is a cool project. How can we invest in it?" And we're like, "Well, gee, I don't know. Let's go figure that out." And we discovered this thing called the SEC, and I don't mean the Southeastern Conference for you football fans, the Securities and Exchange Committee, a lot scarier. And so we learned how to properly structure syndication offerings, which is where we can deploy our money, but also raise money from others without doing a public offering, right? It just doesn't make sense to go through 2 years and $1 million to buy a $10 million piece of real estate on a public stock exchange. Some REITs do this, but they're much larger. So we started doing that. And then we had several successes in the last cycle. We were able to dispose of 8 of our assets and complete that business plan. So we were able to get the full cycle experience. And since then, it's been history. So we now own anywhere from the kind of middle to upper end real estate in 6 different states, mainly the Southeast and Texas and a little bit of Midwest. So we try to stay off the coast. We try to buy in areas where the community will be appreciative of us investing back in the buildings. And ultimately, our investors have grown to trust us through that process because we have consistently not only stewarded their money, but returned it with a lot of friends. And even, I can't say everything has gone perfect. In the last 18 months, I think everyone would agree that the market has been interesting, to say the least. But even through these times, we continue to navigate. And even if we're sailing through a hurricane, you're still sailing through a hurricane with a lot of precious cargo on board. And so you have to make sure you make it through. And to date, we're proud to say, here we are.
What has been maybe the biggest driver of success for you and the team, especially during the last year or so with the interest rates going up? Because a lot of the syndicates did experience quite a bit of adversity.
Oh, yes. The biggest thing is we did a lot of permanent long-term fixed rate debt. So we didn't really feel the interest rates on more than half of our portfolio because we already had 2-3% locked in for 10 years. On the properties where that didn't make sense, because if you're doing a deeper construction project, you're pretty much stuck to a floating rate loan. We studied economics, right, in our tenure to understand that this thing is cyclical and it's probably going to go up. The rates are going to go up in the time we hold this building. Now, we didn't know it would go up this much, right? But we were buying things called rate caps before they were cool. So we were like we were artificially fixing our rate by buying like a 1% strike, which means if the floating index got above 1%, we're just paying 1% max plus the spread of 3. So we're still paying 4 and 5% on those assets, and it was a great investment. So I would proud to say we have not really felt the variable interest rate problem. Probably the bigger thing we've had to watch is that with rates where they are today, it's a little harder to whereas we thought we were going to do a refinance and pull out $10 million on a building, we might be refinancing just at par and just holding on to the asset. So it locks your equity for a little while, which is frustrating as an investor. But you have to always remember, as long as you keep the mindset that first it is return of capital, and then you think about return on capital, always making sure that money is safe. And the only way you get in trouble, Eunicia, is you run out of time or money. That's it. If you don't run out of time or money, you can sail through any hurricane and just keep right on going.
That's so beautiful. It's beautiful because having that insight and that wisdom to think, I'm all about thinking outside of the box, to think outside of the box, and sometimes really going against the grain of even an entire industry is where those golden nuggets are. And it sounds like that has really paid off for you guys. Chet, last time we were talking specifically about what does it mean when you have your broader professional team talking. And in the case of a lot of our clients, we're talking about the financial team. When you're looking at your own business, what would you say are the benefits? Because I know you guys are of the same belief of ensuring that you have the proper stakeholders at the table And the reason behind that question is obviously number one, we cannot talk about it often enough. That's how costly it is to people that don't have their team together. But at the same time, it provides people an awareness of, hey, I could be doing things different, and we're all about that. Tell us a little bit about how that has worked for you and your team at Quattro Capital.
So anyone listening to this should turn your listening ears on right now. And anyone watching the video, you notice I just leaned forward and came to the edge of my seat because I'm excited to talk about this one. So this is something that I have experienced firsthand what can happen when you think you know it all and you don't, right? And I'm going to arguably say the more you think you know, the more dangerous you are. You hear people say, I know enough to be dangerous. That literally means I know enough to make certain decisions, but I don't know all the details, and those details will bite me in the you know what. Okay. And so here's what happens, right? When you're running an organization like ours with roughly at the time of this recording, about a little over 200 million in real estate, 6 states, lots of investors. I think we have 400 investors across all of our deals. You have a complex tax situation. You have a complex legal situation. Your just legal alone breaks into real estate transaction law, securities and exchange law, business law, tax law. That's 4 professionals right there that I have to have who are, and if you try to say I'm going to go to one attorney for all that, that's like saying I'm going to go do heart surgery with a general practitioner at the health clinic, right? It doesn't make sense. You have to have specialists in all these. Taxes with real estate it's one of the most complex tax situations in the country. Our tax law for real estate is literally that much of a book that's that thick. And so let me tell you what's happened when we didn't have our professionals talking to each other. And here's what I mean. Let's just take, most of you are business owners or some kind of investor, so you understand the concept that a business will have, probably if it's an LLC, it's going to have an operating agreement. That is the governing document that says what the business can and cannot do. It's like the bylaws, if you will. Most people don't realize you don't just want your business attorney to draw that up, you sign it and call it a day. You need to read that document. You need to follow that document. And you need to have your tax professionals opine on that document, your tax attorney opine on that document, your SEC attorney opine on that document, and the list goes on. Property management, for example, property management needs to know what that document says. And so, like, everyone has have you guys ever, Eunicia, have you seen those glasses you wear for like 3D movies, the 3D goggles, they're red and blue, right? There's all sorts of different shapes and sizes of those. Some have little shapes on them when you put them on. Some are for eclipses, and they're all different types of goggles. Everybody comes to a situation with their own perception, right? And so if I'm a dentist, I'm going to look at your smile, which is beautiful, by the way. I'm going to look at your smile with a very different set of goggles than me as an engineer would, who knows nothing about teeth, right? So me as a tax accountant is going to look at your operating agreement with a very different set of eyes than you as a business owner will, or your securities and exchange attorney will. And if those people, think of them all as members of or musicians in a symphony, right? You have to be the conductor up here with that symphony. And if those players are not all reading the same sheet music and playing in unison, it's going to sound awful and there will not be harmony. This is what happens when your professionals are not talking. You wind up with an awful sounding thing that is nowhere near harmony. And in some cases, even if it's almost there but just slightly off, sounds worse than if it was off all entirely. So I can't stress enough that is an important thing. And the bigger you get, the more money you're managing, the more type of assets you're in, it is worth them. You're going to pay it one way or another. You're either going to make big tax mistakes or big business mistakes, or you're going to pay your professionals to do it right and mitigate your risk. It's all about risk mitigation, folks.
Oh my gosh, Chad, I couldn't have said it better myself. Oftentimes, maybe you can talk to our listeners today about also what does it look like when, as a successful business owner or successful entrepreneur, to say, you know what, I'm willing to invest. Because all too often people look at, I love the fact that you were talking about from a legal perspective, right? Just most people will just say, I have an attorney. And that attorney has an area of specialty, maybe two, but to go beyond that and assume that they're really good at what they do is probably a stretch. So in order to make sure that we have access to all of the awareness and all of the knowledge that as business owners for our individual businesses or for our clients on the financial side, it takes an investment. And oftentimes, especially individuals that have not paid for professional services, they don't understand that they're gonna pay. Sometimes what we see in many cases, individuals can pay as much as 50, 60 times more than if they actually paid a team of experts to help them and guide them along. And when we're talking about the law of large numbers, we're talking about millions, if not tens of millions in some cases, certainly hundreds of thousands of dollars. Can you talk about that to the person that is maybe thinking, I got it, I'm just going to really figure out where the nooks and crannies are and we'll patch the holes?
I'm going to give you an example, right? And I'm going to use a property I bought, right? So this goes just the same. So instead of talking about tax and legal and all that kind of stuff for your portfolios, think about me as a real estate investor. I bought a building for $8 million. So we're not talking, and folks, the guys who manage your own single family rentals, I'm not talking to you like, yeah, you can probably do it better than a management company, because there's no good management companies when you have 3 units. Okay. So I get it. But if you're at the level where there are an abundance of professional property management companies, so this is a 128 unit property, right? In the southeastern area of the US. And I bought it out of a lawsuit, sadly. That it was a family suing each other, and the judge made him sell it to me, which was great for me. There was an old individual who, he and his wife, they managed this asset themselves. They hired one person to sit in the leasing office. They didn't realize you should raise rents over time. I don't know how one buys an $8 million building. When they bought it 40 years ago, it was a $2 million building, but still, it was a lot of money for someone who didn't know how to run this thing. They had an 80% expense ratio, which in real estate is huge. That is, I don't know how they were spending that much money. I do now that I got into the legal situation. They were hiding some money from the trust, but that's a different thing. And so they literally had expenses coming out of their ears that didn't need to happen on a property like this. They were literally the rents were $500 and I now have them at $1,100, and that's still cheap in that market. I mean, we're talking I doubled income and I didn't do this by me managing it. I employed my professional management company with a professional marketing team who knows how to leverage the intricacies of apartments.com and all the different leasing sites. They know how to get the best tenants vetted in there, the best residents. They know how to do the right background checks. They know how to make sure that we're pulling the right demographic for the community in. So some of that fair housing, yes, but targeted marketing towards who would thrive in this community.
Of course.
And then, of course, the expense load. When you run at scale and you know what it takes to run a building, we dropped our expense load to 40% of income, and that's 40% of the new income. So it's just amazing that those who think you can do it yourself, yes, you're going to look at your profit and loss statement, and you're going to say, wow, I'm not paying anybody else anything. It's just me. But what you don't realize is you're probably leaving 50% of income available on the table because you're not making the right decisions strategically, right? And maybe you're spending way too much in expenses, whereas if you had hired that professional, you would be in a much better cash flow position. And so take this over to your investing life. I don't know what all your clients are doing. They're business owners or they're day traders, whatever they are. Nobody who is rich and wealthy and has really made it does it on their own. They have advisors who are good at certain things. You don't take your health into your own hands. You go see a damn doctor, right?
Exactly.
You go to the dentist and you let them clean your teeth. It's the same thing with your accountants and any other, your legal advisors, whatever you're into, anyone who you can pay by the hour. You don't even have to bring these guys on staff or girls. You pay them by the hour. You may only need 10 hours a year of their time, but you got their time, you got the right recommendations, and you move on. I cannot tell you how valuable that this lesson is. If you hear nothing else, it's pay for expertise. Be the dumbest person in the room. He who thinks he is high and mighty will be humbled quicker than you can imagine.
It's so powerful, Chad. And you talked about expense ratio, and you also talked about the additional income or the additional revenue. 2 quick examples, very different individuals. One of them were in the process of them coming on board with us. When we looked at just one area of their investments and we looked at their expense ratio, by shifting that expense ratio, it would gain them an additional $8 million. And we were only talking about a subset of those assets that were in that specific class. over $8 million just for that. A different client going through the process of getting close to retirement, making a major shift in terms of businesses and partnerships. And the pension plan that was put in place for his old company basically said, hey, when you start taking income at retirement, if you want to leave the money with us, this is what the income is going to basically look like. So you're basically going to have pension for life. And he said, what do we do? Funny story is we had already started looking at what were the possibilities, but not having anything to compare, it was like comparing apples to oranges. Guess what? Now we actually had that letter that said black on white, here's the amount of money they're going to get per month for the rest of your life. And so he came back and he said, I remember us talking about something similar. Can you re-energize it? Of course, we just pulled up the documents, looking at where things were. This individual in retirement is going to bring in over 60% more on a yearly basis. Wow. And we're already talking about a really large amount of money on a yearly basis from that pension, shifting that money into something that gave him still the same exact benefits from a value add perspective, but the actual amount that's going to be coming into the household is going to be over 60% higher year over year. That's huge. So if we're thinking about just small shifts and moves like that, why do people think about the cost, to your point, the cost of paying for that expertise versus they're investing in themselves to see the returns? It's a paradigm shift. Chad, one other question that I wanted to connect with you on is your superpower. Oftentimes people don't realize what their superpower is. As you look back, what would you tell our listeners today that your superpower is, and for them to maybe think about what does it look like for them and how can they implement it for their own benefit?
Yeah, folks, and I believe your superpower is something that you do better than anything else. It is the thing people may look to you for, right? And I mentioned I had the engineer brain, right? I'm able to get very deep, very detailed. I can understand complex things. But as you can tell, hopefully on this episode, I can also speak human, right? I can come out of engineer world. I can come out of technical detail and depth, and I can explain something using parables or stories or more simple, big picture terms so that the non-analytical folks in the world, which are most of us, can really understand the concept. And so it's something that my investors really appreciate, because we have a lot of complex things on our assets, right? The ability to go in and figure out what's going on with the machine and then come back with a diagnosis and say, here's what it is, here's what we need to do, and here's why it happened. That's definitely a superpower that I have, and it's served me well in many aspects.
I love that, Chad. Thank you so much for sharing that with us. So as you're listening, be thinking about what is your own superpower, especially if you're thinking about, I'm in a trouble situation. I'd like to do more. Maybe I want to change careers. Maybe I want to start something else on my own. Take Chad's example and examples of many of us now business owners, business entrepreneurs that are successful. You can do it. And if you're already there, you can elevate to the next level. Chad, where can our listeners find you should they want to get in touch with you?
Yes. So if you Google Quattro Capital, you should find the quattroway.com, or I'll just give you this one link deal. If you do chadsutton.info, that's Chad, SUTON.info, that'll be a direct link to my contact page. I'd be happy to talk with any of you.
Awesome. Thank you so much for sharing that, Chad. And also that information will be in the podcast notes. Make sure that you stay tuned for the next episode. And until next time, I hope you all have a great day.
Are you truly ready to elevate your business to unprecedented heights and keep more of what you earn? Before you move on to your next challenge, consider what you could lose if you hesitate. Immediate action. Step up by visiting Excelstra.com. That's EXCELSTRA.com now to connect with Eunicia and her expert team. It's your gateway to discovering innovative strategies that help you keep more of your hard-earned profits. Stay informed. Don't just listen, subscribe. Make sure you're consistently equipped with the latest strategic insights that directly impact your bottom line. Your business, your next level is your essential resource for your ongoing business success and profitability. Act today to secure a future where you keep more of every dollar earned. Your business doesn't wait, and neither should you.